good morning, fellow traders, and welcome to today's live session. As you know, today is Friday, September 8th, 2023, and it's the close of really the first full week in the month of September. Now, of course, lately it's been kind of difficult finding high probability setups, mainly due to how the market's been moving. The markets primarily has been moving in a consolidation in a range, but we still want to see if we can figure out some high probability setups in the market. But usually when the market is moving the way it's moving now, it's typically best just to be more conservative and just more risk off, so to speak, where you're not in the market all the time. But this all depends on your time frame as well. Like if you're trading from a higher time frame, maybe like the 1 hour or 4 hour chart, you definitely want to be selective on which trades you execute. But if you're scalping, then you'll definitely have opportunities even when the markets are range bound. So right now we're looking at a particular pair, and I really don't have too many pairs to share with you guys on this morning. We may just cut today's meeting short. We may just do maybe 30 or 45 minutes today and then call it a day. But for the most part, there hasn't really been any clear pairs or any clear setups. Of course, we do have the indices, and we'll talk about that. But for the most part, in regards to currency pairs, there really hasn't been much. But with that said, let's move on and let's talk about this first pair, which is the Kiwi Yen, NZD JPY, and we're currently looking at the 1 hour chart. But even when you look at this 1 hour chart, you can clearly see that the market's really been trapped in a range ever since the beginning of September. It's really been moving sideways for the most part. We have the lows, right around here, the lows, and then we have highs, right around here. So it's really been moving sideways within a range. But, for the most part, what we're going to do, we're going to look at momentum and we're going to trade off of that. So right now, if you look at the chart right now, what you can assume is that, this is sort of like an inverted head and shoulders, where we have the left shoulder, head, right shoulder, and now price is expanding to the upside. And it broke this descending trend line resistance right here. It broke above this descending trend line resistance. So we could see more movement to the upside. That's something that I'm anticipating. However, we are approaching an area of resistance or supply, right around here. So then we have to be somewhat careful with how we navigate these waters. But like I said, for this week, it's been really interesting. Like I haven't really found anything that's clean and anything that's, obvious. So there's two ways you can play this scenario. So as you guys know, we're likely looking for a buy, right? We're looking for a buy, even though price is testing resistance. We're looking for some type of pullback or retracement or correction in price. That's what we're looking for right now. But we can do one of two things. We can trade the correction now, or we could wait for the breakout. But let's talk about the first scenario of trading the correction or the pullback. So we know we want to look for a buy upon a retracement. Now, the next thing we have to ask ourselves is, where do you think the buyers are going to come in at? And, there's a few spots that, I have on my radar. But for the most part, if I'm going to draw out the zone right now, it'll be this zone right around here, this particular zone right here, where you have some hidden demand or hidden structure with this red candle, and we do have some inefficiency. So then I just drew out the whole range right there. But we're going to call this an area of 1 hour demand. So then what I will be looking for, this is one of the scenarios. I might as well draw it in first. We'll be looking for price to pull back maybe to here, and then from here we'll look for bullish confirmation before we enter our buy. And, we can target these highs, right around here. So then that's one scenario. Now, the next scenario is more conservative. If you really want to make sure that we're in a space or in an environment where, you don't see that much resistance, what you can do is typically wait for a breakout of this range to the upside. So in other words, let me just draw this in. A break to the upside, pull back, and then from here we'll look for the buy. Because we know historically this range or this zone has been respected. So, in order to know for certain that the sellers aren't going to take control, we need to see the buyers help push price above this zone. So then there's two ways you can play this. You can wait for the correction to this zone and then look for a buy, or the safest route is to wait for a breakout to the upside and then for a pullback. So then let me just draw this in with the arrows. So again, let me just do this right here. First scenario is price coming down to this zone, and then from here we'll wait for bullish confirmation. We're not going to just assume that price is going to rotate. We need to wait for that confirmation to take place before we pull the trigger, and then we'll trade it up to this zone right here. So then that's the first approach. First approach is a buy right around this area right here, this zone. So then that's the first approach. The second approach deals with a breakout, which is probably what I would prefer, if I was you. If you want to be more risk averse, you just wait for price to clear the zone that's been respected on multiple occasions. And then from there, you simply wait for the dip in price. Wait for price to correct, to retest the zone. What was once resistance becomes support. And then from there, we'll enter the buy. And you can trade it, likely to the next area of supply on the 4-hour, which will likely be these highs around here. But yeah, this is an area that, we're definitely looking into as far as a target right around these highs right here, if we do see the breakout. But let me go to the 4-hour first before we do anything else. So then on the 4-hour, we do see that we definitely have a neutral environment. It's been trapped in a range, you could say. And the only way for us to know for certain that things are changing is if we see a violation of the zone. But what we're going to do is just look at these examples that we have here. And we have two alternatives. Alternative one, or plan one, wait for price to pull back or react to this zone. Wait for price to pull back into this demand zone and let it go right back up to this supply. So then that's plan A. That's the first plan. And then plan B is a breakout and a buy, right around here. So again, we'll just wait for price to expand and pull back to retest the zone, and then we'll look for our buy right around here. So yeah, that's pretty much it in a nutshell. But yeah, this is the Kiwi yen, and yeah, this is what we'll be waiting for right now, some type of pullback or correction into the zone from a daily, from a 1-hour perspective. I know there could be opportunities to get involved on a smaller time frame, but we are hitting 1-hour supply, so it may be best just to wait for at least a 1-hour or 15-minute correction. If we go to the 15-minute, then yeah, it could be anywhere within this zone right here where we see these wicks right here. That could be a 15-minute demand right around here with these wicks. So as a matter of fact, let me just draw that in, and then I'll give Marvin a mic, because he may, I think he can add to this. But yeah, so then we have an area of demand right here with these long wicks, and this is where buyers can come in at as well. So then we'll just pay attention to both. But yeah, this is what we're currently looking for right now on Kiwi yen. So I guess with that said, I don't know, Marv, did you have anything that you wanted to share right now that you can add to this analysis or anything?
Yeah, well, there's
quite a number of things that I want to say, but I'll reserve most of it for the fundamental analysis or the macro part of the webinar. But really, I was just going to talk about the Japanese yen and even how we see really across the board in most of our yen crosses, we're seeing some weakness come in at the end of the week. And a lot of times that weakness is due to expectations that the yield spread or the yield differential between the Japanese yen and other G10 currencies or other currencies in general is going to widen. So let me just let me just clarify this. Okay, so that for most of the year, for most of this calendar year, we've been seeing other central banks hike interest rates, or there's been talk of other central banks being hawkish, raising borrowing costs, raising the cost of money, which is going to be negative for the yen, especially since the Bank of Japan has chosen to keep their interest rate in negative territory. So then, in many ways, the Japanese economy has sort of been trying to boost and quicken and foster more inflation because they had a weak premium. They have a negative interest rate for their currency. So then they want inflation. They've been trying to stoke inflation for 20 plus years. And that's why we have Abenomics, who was the Japanese Prime Minister, Shinzo Abe, who got assassinated last year. Like, he was the one that sort of helped, along with I can't remember, I think it was Kuroda and some other policymakers in Japan, to form this policy where they would have a lower yield. And the reason why they have a lower yield is simply because they would use the Japanese yen currency to finance higher premium or higher yielding transactions. But for today, we're seeing this sell-off in the Japanese yen. We're not quite seeing the sell-off in the US dollar. The US dollar is benefiting. And when you see both the US dollar go up and the Japanese yen sell off, it could simply mean that the market is sort of priced again that at some point in the future, central banks or the Fed, like the Fed, will have to probably keep rates higher for longer, or they may have to actually hike rates a little bit more to fight inflation, because what they could be seeing signs that inflation may be picking up. So with that being said, we know that if there's this resurgence of the narrative that pricing pressures are going to pick up, then that will mean most of our yen crosses are going to head higher as the Japanese yen tanks and sells off, as that yield differential between the Japanese economy and the US economy and other economies continues to widen. That spread continues to widen between between those countries. So so really, when you look at the Japanese yen weakness is inversely correlated with oil prices. So if we're seeing oil prices of crude oil is picking up, or even other commodities are picking up, then we should see the Japanese yen sell off. So then, I'll talk a little bit about that, a little bit later. I know we're going more into the macro. This is pretty much a part of the webinar where we talk about technical analysis, but I'll just save that for later. You just know that, the Japanese yen is selling off today. I think it's one of the laggards for today, the chief laggard, the weakest currency for today. And that could also be a sign that also traders are willing to take on a little bit risk, and we may see the market close the week with some risk appetite after a week of selling off, or after a week of selling pressure due to news coming out of China and other issues as well that we'll talk about later. But yeah. So with that said, we'll be looking to buy Kiwi yen, and we'll see what happens. We'll see how price reacts to this zone that it's testing right now, and we'll see if we can get an opportunity to buy. Are there any questions before we move on? Going once, going twice. All right. So with that said, let's move on and let's go to our next pair. I'm going to do because they're sort of correlated, but not really, but to some degree they are. And they are because they're both yen pairs. But the Aussie yen. Let's do that right quick. I'm just going to be real quick on this one. Ooh, okay, yeah, I don't know why I accidentally closed down the window. All right. So yeah, this one is quite similar to, what we saw with the Kiwi yen. So right now we want to be a little bit cautious. We can see that price is still within this range. Overall, it's still within this range. This range has not been as long as the range on Kiwi yen, but it's still trapped in this consolidation range where we have demand down here, and then you do have supply right around here. We could look to the left, we can see that we have that hidden supply um, right in this move down. I don't know if you can see this one candle right here on this move down. This one candle right here is what we call hidden structure, in this case hidden supply. And you can see that every time price came and touched it, we saw a reaction. Came, touched it, saw a reaction. So then every time price comes to this zone, we, especially the last few times, we saw a reaction. So then there's a possibility we could see a reaction, here as well, to the downside. However, if we zoom out, what we're going to do is assume that that momentum is going to continue. Of course, we need to wait for a violation of the zone and a break of this order flow high for those who do know about order flow. So yeah, what we're going to do, let me delete this right now. What we're going to do is simply wait for price to break this area to the upside before we buy. So we're going to wait for price to break, retest, and buy. And then trade it up to 4-hour supply right around there. So yeah, that's something that we're going to look for, very similar to what we saw on the Kiwi yen. So again, wait for the breakout to the upside, and then wait for the correction, and then wait for the expansion up into this zone, this area right here, this 4-hour area of supply or resistance. I mean, we're on the 1 hour, but this is 4-hour supply up here as well. But yeah, that's what we're going to look for. So hopefully we'll see how price reacts for the remainder of the day. Of course, this is a Friday, so then you don't have to really force anything to happen. It's the end of the week, and that's one thing I want to emphasize, and it's something that I think is important because and it all depends on your style of trading. But yeah, I apologize for that. But yeah, like when it comes to trading these markets, sometimes less is more. And I think I've mentioned this before, but it's imperative, it's crucial that we really, really understand that, and we get an idea that, hey, I don't have to be in a trade every single day. I can just find and select 2 to 3 good, high quality setups that are A+ setups a week and be fine. Now that all depends on what time frame you mainly trade on, but of course, you can make good money and not really be in the markets every single day, and that is what the data is showing, especially for those that are familiar with these prop firms. Almost every single one of them says that the best traders that's making the most money trade the least. They trade far less than the ones that are a part of the company and they're not making as much. So oftentimes less is more, and it's mainly due to the fact that they enter a position and then they may hold it and squeeze as much as they can out of it, but they're very selective on the setups that they execute and take. So that's just a school for thought, or just food for thought. I mean, as far as something that you may want to adopt, just trading less, just finding ways to screen out your trades and filter out your trades so that you're not involved in the market as much. Because I know even for this week, it wasn't the best week, but I wasn't really involved that much. I entered a few trades, but it didn't go my way this week. So of course, with the way things are looking, I may end the week negative, which is really the first in a long time. But of course, that happens. But anyways, for this particular setup, we're waiting for a breakout to the upside, a pullback, and then we'll look to buy on bullish confirmation as soon as that happens. However, there's also an alternative option because we could see price reverse as always. And what we can do, we can look to see what happened every time price hit the zone. So then you can go back in price history, because remember, price always leaves footprints on what it did. And oftentimes a similar way that price reacted to a zone in the past, it'll react in a similar way in the future or in the present. So then that's something that, you definitely need to pay attention to. Like, for instance, well, you have a few examples where, price tested this area. Well, you have one, right here, and then you have another right here. You can just go to each scenario and look to see how price reacted. Look to see, what footprint was left. So, you can just say, hey, okay, let me go down to the 15-minute. Go down to the 15-minute. And what you can see is that on the 15-minute, you can see there was opportunities to get in on a breakdown. So then we can see here, the first one, price went up, came down, went up to retest this area, came down, broke the lows, and then came back up for a retest, and then slammed down. This is what we call 15-minute topping. You see that here. You sort of see the same thing again in this next one, where you see 15-minute topping, 15-minute topping, and then price pushed up, and then we get the retest of this actually neckline right here, and then price fell. So you see the same thing happen, on multiple occasions. But if you look at, well, this one right here, it didn't really give us the breakdown right here. This area held, so we didn't really see anything there. But, we can see something similar even here. 15-minute reversal, pull back and break. So then presently, what we have is this consolidation on the 15-minute. What we need to do, if you want to, you can wait for price to break these lows right here. Wait for price to break this area. This could be your neckline area. And, just wait for a breakdown and a pullback before you start selling again. So then, of course, those are two ways you can trade the Australian Japanese yen. Price will either respect the zone and, head to the downside to test the lows, or we can see a breakout to the upside. So then your job is to be aware of whatever happens at that particular time. If you see a breakout to the upside, then you want to look for a buy. If we see a breakdown of this consolidation on the 15-minute, then you want to look for a sell. So then what you could do is place price alerts at each level. You can place a price alert right here on this neckline break, and a price alert at the highs, which we already have with this order flow high. So if price breaks above here, we'll be notified of that. But you can also place an alert here and just be notified whenever price breaks to the downside. But yeah, that's Aussie yen. Are there any questions about that particular pair or setup before we move forward? Going once, going twice. All right. So we don't have anything there. Okay, let me go to one more and we'll call it a day. Let's go to Kiwi Swiss franc. Kiwi Swiss franc. Okay. So, all right. We're looking at the Kiwi Swiss franc, and we're currently looking at the 1-hour chart. And what we can see is that the market has been giving us some bullish momentum, even though if you look at it, we do have bearish order flow. And, I'm not going to get into the reasons why now, but yeah, we do have bearish order flow. We have order flow high here, order flow low down here, bearish order flow, but we've been in this move to the upside. So, anything can happen, but what we clearly see on this correction or on this phase where price moves to the upside, we see what appears to be almost like an ascending trend line. See this ascending trend line right around here. And let me see if we clone this, what could we come up with? Yep, right around here, right? So we see that price is sort of respecting this ascending channel. And there's a possibility we could see price correct down, test the channel support, and then we could see a buy to, test channel, ascending channel resistance. So yeah, that's, we do have a possibility of that potentially happening. But, what we're going to do for now, we're going to stay on the side of buying for now. We're not going to look for any sales until we see maybe a violation of this structure low right here or this trend line. So in other words, we won't look for sales until we see something like this, a break of this trend line, and then we get the pullback and then down. So we're only interested in buys right now, and that's where the momentum has been really for the past few days. Ever since Tuesday of this week, we've been seeing price making higher highs and higher lows in this correction. So then what we're going to do is look for an opportunity to buy. So again, where could we find those buy opportunities at? Well, we do have a few areas on this chart. We have one right here, where we have this area that can act as demand. So this could be 1 hour demand right here. And then we also have this area right here, which may be where price may go when it tests this channel support, because it's going to take some time to get there. And by the time it gets to this channel support, it could be right near this demand zone right here on the 1 hour. So we're just going to wait for whatever happens. We're just going to simply wait and not assume anything. But if price hits one of our zones, we're going to look for bullish confirmation. If we don't see it, then we'll wait for price to hit the next zone. That's how you need to play it. So when price hits this zone, we're not going to immediately buy. We're going to look for bullish confirmation. If we see the bullish confirmation, we're going to enter a buy on this pair and then trade it higher to the upside. However, if price doesn't give us the bearish confirmation, then we'll see price extend down to this zone right here. And in this zone, which should be near this ascending trend line support or this ascending channel support, we want to see bullish confirmation and then look for an opportunity to enter. So then on these deeper pullbacks, we could potentially see a bigger move to the upside. So then that's the reason why, it's good. It's good to really know when price is channeling, because you can extend your target and milk more out of that trade. So yeah, this is something that we're looking for as well. Kiwi Swiss franc, we're looking for buys, but we're waiting for those dips in price. So then price is channeling. You need to wait for price to come to this first level of demand or the second area of demand. But we'll only execute when we have bullish confirmation. I cannot emphasize that enough. So yeah, let me just do this. So then right here, this is where I think price is going to go to, the second zone. But I could be wrong. So you want to be prepared for both. But yeah, we're going to look for a buy here. This is where I would like for it to go. But we also have this area right here that we cannot ignore. So yeah, we'll see what happens. But yeah, those are our setups for this morning. So we have one on Kiwi Yen. We have one on Aussie Yen, or really two on Aussie Yen. And we have a setup on Kiwi Swiss franc. And that's all that I have for this momentum section of today's webinar. So with that said, what I'm going to do is pass the mic over to Marvin, and he's going to go over, I guess, a few things that can really help you understand what's happening fundamentally. But like I said, today is Friday. Don't try to force anything. It's the end of the week. Just wait for next week if you really want to look for good opportunities. Yeah, exactly. Today is, especially an interesting Monday. Friday. Friday. Yeah. I heard you say Monday and I was thinking Monday. But it's an interesting Friday. It's an interesting close of the week because right now, if you look at futures markets, and should I go there now? Let me see. let me just what I'm gonna do, I'm gonna put up FinViz real quick, because actually there's a few things we need to look at, because we just had some important data come out of Canada job market, labor market data. Their jobs growth is the equivalent of their non-farms. So I guess we can just take a look at that right now. But this is a thin environment, or this is an environment where we're not seeing too much, like as far as too much conviction across asset classes and instruments. But let's look to see what the Canadian employment data came out as. So then we can see here that according to the recent report, Canada, we saw jobs growth, or they're reporting jobs growth of close to 40,000, 39.9K thousand jobs were added to the Canadian labor market. And that's definitely stronger than the forecast of only 15,000 jobs added. So then how's this number right here, the actual number, compared to previous month's number? And we see that there were no revisions to the previous month, which is good. But what it shows is that after losing jobs in July and August, we saw a huge gain in jobs. So then, so pretty much this print, this labor market report, is pretty good for the Canadian dollar. We should see the Canadian dollar rally on this news, and we see the unemployment rate scaled back, tick back. So you know what? No, it just stayed the same. There was no change in unemployment, but it beat the forecast, which means it came in lower than the forecast. So that means that there's less, unemployment. Unemployment stayed the same, stayed flat. So then this is sort of like a Goldilocks environment where we see jobs growth and we don't see any pickup in unemployment, which means that what the Bank of Canada has recently done, and their prior rate hikes, and just keeping rates on hold for the past few months, that's actually creating an environment where there is some level of growth still in the Canadian economy. We're seeing jobs growth pick up. And what's interesting is that hourly wages have picked up, wage growth. Now, typically, this is considered a bad thing, that wage growth is sort of picking up, because that often leads a pickup in inflation. As you have more people that get paid more money, they'll be prone to actually spend more money. And if they spend more money, that actually helps to boost and increase and expedite inflation, or exacerbate inflation. But in this case, it could be a sign of, a steady economy, a good economy. And but for the most part, most of this Canadian market data came out pretty good. So then what does that say about the chart, or of the Canadian dollar, or the Canadian, what's happening in the market for the Canadian dollar? So then let me just do this. Let me just go to, well, I could just pull this up, the CAD equally weighted index, so that we can get an idea. So then if you look at the CAD equally weighted index, you can see the strong, this is the 1 hour chart, and you can see how.
Yeah, this is a plot of the Canadian currency, for those who may not know.
Yeah, the Canadian dollar, Canadian currency, is pretty much an equally weighted, which means that every currency composition or pair is given the same weighting within this index. So there's not one that's weighted more heavier than the other. They all have equal weighting. So you can see here how the Canadian dollar rallied to the upside on what was pretty much a good labor market report. The labor market is still pretty tight. Even in the midst of prior rate hikes, we're not seeing demand destruction. And we saw also, hourly wage growth pick up. So then this could mean two things. The market can be looking at this as a good sign that the Canadian labor market is strong. The Canadian economy in general should be strong, or they can be looking at this as, well, does the Bank of Canada have to do more, because still inflation hasn't reached their preferred target of 2%. In Canada, inflation is still higher than 2%. So does this mean that the Bank of Canada will have to hike more, which would raise interest rates, which will support the Canadian dollar? So then this could be what this is saying to us right now. So we're seeing Canadian dollar strength on this news, and yeah, if there's, you can just look for opportunities to buy the dollar or buy the Canadian dollar on a pullback. So yeah, so this is what's happening here. So let's go back to FinViz. I just want to go to FinViz real quick so that we can see what's happening in the broader market. Okay, right here, FinViz. Okay, so then let's go to futures, the futures heat map. So as you can see, even on this futures heat map, you can see that for US equity futures indices, like the first three or the first four, this is all US based, but you can see that it's pretty flat for today. Like we're not seeing any moves beyond their opening level. It's pretty much flat. Like there's no conviction, there's no catalyst. It's as if the market is waiting for a driver when Wall Street opens for it to break out of this particular malaise or this sideways action. Now, of course, earlier in an Asian session, we did see futures rally to the upside. There's a little bit of enthusiasm. It seemed as if markets wanted to close out the week with a good run higher, a good rally, but that all changed during the European session. We saw a lot of, of course, the futures, U.S. futures, pare back those gains. And actually, right now, we're seeing that it's pretty much trading at break even, at pretty much zero. Like you can see the color, you can see that it's neither red nor green, it's pretty much flat. But the Russell is, of course, it's flat too. It's giving us a slight green tone, but in general, across the board, there's indecision when it comes to US futures market. So then how do we trade Wall Street then? If we don't have anything in the futures market to let us know, okay, what sentiment is, then the only other place to look at is to sort of focus on is what the bond market is doing, because really this whole entire year, really the past few years, the markets have been primarily been moving based on bond prices and where the bond market is. And we're going to get to that in a little bit. But if you look to the left, you see the VIX is sort of, lower. That could be a good sign of some risk appetite. We see crude oil picking up, which is also translated into a weaker Japanese yen, what we talked about earlier. The yen weakens is inversely correlated to the crude oil. So if oil prices are rallying, then the Japanese yen should be selling off, just due to that yield differential. So then we see across the commodity sector, some of our softer commodities rallying. Really across the board, you could say that the commodities are fairly hanging in there for the week. We do have Dr. Copper selling off, as I think fears of the breakdown in the property sector across the world and even manufacturing to some degree. This could be a sign, of that it's getting cheap, that there's a pickup in copper supplies, and that's the reason why it's selling off, because as companies begin to stop some of their building construction projects, manufacturing projects, this would definitely cause copper prices to sell off as demand for those things drop. So then, but yeah, for the most part, the day is pretty mixed. It's kind of hard to say what the sentiment is, and that's the reason why we just trade what we see. We wait for breakouts and pullbacks in price in order to trade the markets, because on days like today, it can be kind of challenging to say, okay, then, what do I do? The futures market isn't giving me anything. Even there's mixed signals even in commodities. So then even if I was to look at the bond market, like, let me just do this real quick, and I'll make this real quick. Okay, let's do this real quick. Okay, let me close these. Okay, so then let's just do the US 2-year right here, US 2-year yield. This is on the shorter end of the yield curve. And we can see that US 2-year yields have been pulling back for the day. Let's go to the daily candlestick so we can get an idea. So we see that US 2-year yields have been sliding lower. This should definitely underpin gold. So then when we do see US 2-year yields sliding lower, or yields across the board, let's pull up the US 10-year to see if that's also sliding lower for another day. And yeah, you can say it is, but of course it hasn't that much, not as much as the 2-year, the front end of the curve. But let's go to the 30-year. 30-year may be positive, but let's see. Okay, no, the 30-year is, still similar to the 10-year, where, it was negative, but it's below its opening price, but it's still lower. So then typically when we do see yields, lower across the board, across the spectrum, then that's traditionally translated as an environment that's leaning in favor of some risk appetite. They're saying, okay, we're rotating into the U.S. bond market because we feel that the U.S. bond market or the U.S. economy is the cleanest shirt in the dirty laundry. So then we're going to rotate into the bond market and be willing to get this high premium because we're expecting eventually the Fed to possibly have to hike rates more. But since there's some concerns in the global economy, like in China and Eurozone, we're seeing this move or this rotation into U.S. bonds. So then the U.S. economy, the U.S. financial market is still attractive. So then this usually can be translated into higher stocks, higher equities, higher U.S. stocks. But, also, if the reasons for us to seeing this rotation into the bond market is due to concerns, fears, safety, flight to safety, then that could also be, that can result in something else happening where we will see a sell-off in equity prices. So then really the bond market isn't really sharing too much to us, anyways. So then in cases like this where the bond market is not really sharing too much, then we just wait for the breakout, whether it's to the upside or downside, but we look for the breakout in favor of probably risk appetite. Since we know that the VIX is lower, it's safe to assume that there's still this preference for yield and for risk appetite. So then we're going to look for opportunities to buy stocks on pullbacks or buy, indices on pullbacks in price. That means, across the board, whether it's the NASDAQ
or buy those yen pairs.
Yeah, buy either the equity indices like the Dow, the S&P 500, or the NASDAQ, or buy yen crosses as the Japanese yen, tends to sell off. So when inflation picks up, or even in times when there's risk appetite, the Japanese yen typically sells off because that finances the carry trade. So, but yeah, that's pretty much it. I know Melvin's sort of rushing me to get out. I think he has something that he wants to share that happened. I think he may have gotten an alert or something. But what I'm going to do, I'm going to pass the mic back over to Melvin. I think we're going to just keep this webinar short, and and then we may meet in the private war room. You'll get a notification of that later on. But we may keep this particular webinar brief for today, and I know Melvin's going to close out this session, or with some other stuff.
Yeah, I'm not going to be with in front of you guys too long. Just a few things I want to point out and review. Even from the last time we did meet, which was Wednesday. We did meet on Wednesday, and I just want to share what we talked about on Wednesday so you can see how things are moving forward. So we looked at a few things. I know one pair that we did look at was the Kiwi CAD, and we was looking for a setup on the 4-hour. Even for that, so you go to the Kiwi CAD, and this is what we was looking for. We was looking for this double bottom, which it did. It created this double bottom exactly like we planned, and then price bounced from there. And then now we're in the middle of this pullback phase. So we're in the middle of this pullback phase where we would look for a potential buy. So, be on the lookout for this. We may not be able to get in on this one this week, likely early next week. We'll be able to exploit this move and trade this all the way up to this trend line or this area of supply right here. So that's a setup that I just wanted to let you guys know that is still in the works. And sometimes it takes days for these setups to form, and this is what some of the better traders do. They don't get in every day. They just wait for those setups that's based on clear, concise, top-down analysis, and then they make their predictions from there. But yeah, so this is the Kiwi CAD. We also talked about the US 30. Let's go there. Yep, the US 30. So as you guys know, we predicted that price was going to likely find some support or demand in this area and pop right back up. The reason why we knew that is because of what we have here on the daily. What we can see here is that this is an area of hidden demand, so to speak, or really internal demand. Is not as obvious, but we predicted that price is going to bounce from here and likely retest the highs, and maybe even go higher than that. I know on the 4-hour we have the area that we want to identify, which is a bit higher or around the same area. So then we're expecting for price to go all the way up here on the US 30. So we're definitely expecting a bounce. Like Marvin said, today there's some level of risk appetite. So then we're expecting the Dow to continue pushing up in that direction, and we can exploit this move to the upside. So that's something that we're definitely looking at. What you could do is just wait for maybe a 4-hour bottoming to take place and then get in. In other words, wait for a break of this high or whatever. Let me just draw this in. Wait for price to maybe break this high or really clear this high right here with this hesitation candle right around here. You can wait for price to clear that high and then look for the pullback and then get in. So then that's something that you could do. Or if you're more aggressive, you could look for your buy now, because we are testing an area where you see all these wicks right here. Definitely buyers want to come in and create this push to the upside. So then that's something that you can pay attention to. So, of course, my bias is to the upside for the US 30, but we'll see. I would like for it to break this order flow high that we have here. This is our order flow high, and it would need to break that in order for me to really get involved, I think. Let me see. Let me go to the 15-minute, because I don't know if did I adjust this? I'm not sure. Yeah, but yeah, this is our order flow high right around here. And yeah, this is good enough right here. But yeah, we're waiting for price to likely break that high before we commit to buying. But I may, it depends on how the market opens. I may consider buying a little bit sooner. So who knows? But yeah, I'm expecting a push to the upside on the US 30. Now, all right. So then now let's talk about the NASDAQ. Let's go to the NASDAQ. Okay, and on the NASDAQ, what we were waiting for, you remember we saw this 4-hour topping, price broke to the downside. We did not get a legitimate pullback on the 4-hour, but it looks like we're seeing one right now. We're seeing this pullback. As a matter of fact, let me just do this. Well, let me just modify this. This area right here will become our area of supply right here on the 4-hour. So then we can just simply wait for price to test this area, which it did the first time. So we definitely have to be on the lookout, because price could be getting ready to expand lower. But on this 4-hour pullback, let me ask you guys this question. On a 4-hour correction, what time frame do we drop down to if we want to see the 3-wave type pattern or 3-wave correction? What time frame will we drop down to if we want to see that? I'll give you guys an opportunity to chime in. But yeah, there's a certain time frame that we will definitely want to. Okay, so then yeah, 1 hour. All right. But okay, so let's see. All right. So right now we're looking at the Kiwi, and we don't see a 3-way pullback yet. What we have is we have a leg A. This is leg B.
So I'm expecting or anticipating a leg C to retest the highs before we see price slide lower. So that's something that I'm anticipating, but who knows? We'll see. Only time will tell. Hopefully we'll get that leg C, but if not, then we'll just see price fall as we predicted. Price came to this area of supply, and then we saw the sellers come in and push price lower. So that happens from time to time. But yeah, the reason why price is responding is because of this internal demand on the 1 hour. We have this internal demand area on the 1 hour, and price is respecting that and is heading higher. So yeah, we'll see how this all plays out, but for the most part we're still bearish on this pair. We just need to wait for a little bit more clarity before we consider pulling the trigger. All right, so yeah, are there any questions about anything that we talked about today? Remember, we're waiting for that pullback to complete on Kiwi CAD, NZD, CAD. On the US 30, we're expecting a bullish move or expansion to the upside for maybe a few days. And then for the NASDAQ, we're expecting price to push higher for today, form that leg C. And then maybe early next week, we'll look for that short that we're anticipating and that we're looking for. So, we'll see. But yeah, I hope you guys got something out of today's session. Thank you guys so much for coming to today's session. We really do appreciate you. And as we always say at the end of every single meeting, remember to always count your blessings, not your pips. And we'll definitely see you guys soon. And yeah, before I forget, with the whole My Forex Funds shutdown happening and freeze, all hope is not lost. There's other alternatives that you can use, and some good ones. And what I'm going to do is probably right now pick out my top 5 or maybe top 7 that I would endorse and recommend for you guys. So then I'm going to actually work on that real soon and add it to the Discord, and you guys should have that information shortly. But yeah, that's it. Thank you guys for coming. Remember to always count your blessings, not your pips. And we will definitely see you guys soon. Stay encouraged, stay blessed, and talk to you later. All right. Okay then. Bye.